Hello and welcome to Gold US Dollar Technical Analysis. Yeah, pretty much the last update for this year. I decided to start this analysis with the commitment of traders data. So I inserted some numbers which you can see on the chart. Basically, those numbers mean the positioning of managed money within or for gold, meaning a high number is a high number of long contracts. So a lot of managed money positions are rather bullish. A low number means a low number of long contracts or a overhang of even short contracts. So basically, as you can see, I mean, this is the all-time high in 2011. There we were at 228,000 long contracts. As you can see, I mean, even there, pretty much, essentially, every time there was a low, this kicked off a major rally, basically. So right now, we are sitting at 238, and we were at 83,000 contracts, and now we are around 220,000. I don't have the 100% accurate data right now, but in my opinion, we are too far into this into the long positioning of managed money for gold to kick off a sustainable rally, which could lead all the way to $1,900 or something. So in my opinion, even though this move went really high, 1522, 1525 even, I think, I will just go into more detail. Even though this went really high, I still think it is just a correctional move and not yet a rally. I find this really sad because I'm pretty much personally looking forward for a rally in gold. But in my opinion, I mean, it's just too far. We are too far in this long position, in my opinion. I mean, the only possibility would be essentially a significant market crash, but for gold to really go high in spite of this heavy long positioning right now of market participants. Definitely a possibility might be that right now this is all a symptom of means to cover for the risk during the holidays and the change of the year heading into 2020. And maybe at the 1st of January or 2nd of January, we see a drop down in gold. That's perfectly possible. It is possible that this move, because it went so high, that it goes even a little bit higher. But it's, in my opinion, gold is not yet ready for a significant rally like this. I mean, as you can see here, we had even a short overhang, so more short contracts than long contracts, essentially. And for a sustainable rally like this, which really takes gold to new highs, we need to come down into this area, so close to zero or even into this negative area. Otherwise, I don't really see a rally happening. I mean, here we were at 37, at 70. Those numbers were similar. And so pretty much this is why I think gold is not yet ready for a rally. As to the wave pattern that is unfolding right now, there are a couple of possibilities. Right now, I'm pretty much still leaning towards the triple combo wave, which essentially would go something like this. This is the, no, it's not the W. Let me just correct this. This is the X. This is down there's the Y. And this is probably another X. And I expect another Z. So I had the W, I had it pretty much down here. there. Okay, so this might be a combination. We could also see a Z that doesn't go that low. Maybe it stops at 14.45 again, but something along those lines. Maybe this was the high and gold does not go higher. Maybe gold goes a little bit higher. I mean, if we use some horizontal rays, we could place one here. So this is obviously a possible target for gold. It could go all the way to, what is it, 15.35. And yeah, I mean, above this is still this 15.55 and 15.60 area, which also poses significant resistance. So in my opinion, at some point here there will be a turning point, and of course, I mean, I could be wrong. The sentiment could be, there could be enough room for gold to go high already. Just in my opinion, it doesn't look likely for the moment. But if gold turns around here, we have to look very closely at the following correctional pattern. If this forms nicely and does not really go low, and we see bullish tendencies forming, we could argue that this might be a correction move down, maybe to this area, which would kick off a new rally. But yeah, in my opinion, right now it's not the probable scenario. In my opinion, I think it is more likely that we are just looking at a correction move which should find its end in the next couple of days, and then go down into, I mean, upwards correction move, and then go down to finish off this long correctional period, and yeah, hopefully come to an end somewhere down here. We have to see where possible targets for this are. I mean, the EMA 200 goes with us, and yeah, just basically wait for one hand, wait for gold to finish this move and head into the correction move, be it a correction move that goes all the way back down here and everything gets sold again, or be it a correctional move that just corrects a little bit and then heads off, and we have some kind of 1, 2, 3, 4, 5 impulse that goes even higher. Yeah, right now it's very hard to tell. I personally did not anticipate gold to go that high, to 15.25 even. Yeah, but I mean, that's just how the markets are and what they do. They sometimes do unexpected things, and yeah, but in my opinion, as I said, I think we're looking at this X move and then Z move down to finish off the correction, and from there go up again. Okay, so that's it for gold. I hope you all enter 2020 on good terms, and yeah, 2020 is going to be a very exciting year, of course. I mean, every year, every day is exciting in the financial markets, and yeah, we're possibly in for a ride, maybe not, depends on the asset. We will see, but yeah, overall, I hope you get a good start into 2020, and yeah, wish you a nice day, and thank you very much for watching, and see you soon.